Joining us for a further look at what's playing itself out on the market scene is Faheema Adia from Momentum Securities. Thank you so much for your time, Faheema. How quickly things changed, because a month ago, the markets were fretting over an anticipated U.S. recession. That's basically not playing out anymore.
Afternoon. Thanks for having me. Yes, things have been changing very quickly. And the picture just, I think, on a weekly basis actually changes. So we're seeing a lot of volatility. And I think the key data we saw that came out yesterday was those GDP numbers in the US for the second quarter, and that showed 3% annualized growth. And coming in better than consensus expectations. And I think that really is what alleviated some of those concerns that investors had about a potential recession. So definitely good to see that positive data come through yesterday.
Well, another thing that markets were fretting about as they were worried about the U.S. recession was Japan. Of course, Japan, as it kind of ended its era of loose monetary policy. We did see some inflation figures coming out there and actually showing growth surprising to the upside. Is this further affirming the direction of monetary policy there?
Yeah, so it was quite interesting that inflation reading actually unexpectedly increased to about 2.6%, and that was actually above what the market was expecting. So yes, I think it's quite likely on the back of these higher inflation numbers, we will likely see the Bank of Japan look to increase the interest rates in the coming months. But yeah, if you look at the data there in Japan, it does seem the very recent interest rate hikes might be starting to have an impact. We're seeing employment rates start to come off, so the labor market does seem to be cooling, and retail sales growth is also slowing on that side.
All right. Well, let's come back home and take a look at some of the company news that came out of the JSE, starting off with the Northern Platinum. They released their annual results today, showing double-digit decreases from the top to the bottom line, right down to the dividend. Of course, the pricing has gone south, but production has gone north. What is your reading of that compass?
Yeah, so I think it was pretty well guided in terms of the trading update they provided earlier. But yeah, it was a difficult period. If we look at the HIPs, down almost 82%, sales revenue decline. But like you said, there was better performance in terms of production. I think that was up about 10%. But the main reason for this fall, I'd say, in their results has just been due to that PGM basket price, which is obviously something they have limited control over. But I think they've managed to perform decently considering this and considering the headwinds they're facing. The costs were controlled very well despite higher inflation in the mining sector. They managed to rein that in quite nicely. And then I also see that they sold some of their Implats shares, and that helped to bring down their debt position quite significantly. So yeah, I think on this one, we just basically need to wait for some recovery in that PGM basket price before we will see some recovery there.
Just another interesting thing, just as you're talking about Implats, the CEO did mention yesterday, after the release of the results, that the company is not planning on building any new mines in South Africa, halting some projects as well due to the threat of electric vehicles. Is that something that investors are thinking about right now in terms of their investment outlook for PGM miners?
Yeah, so it's a difficult environment right now for PGM miners because if we look at the global landscape in terms of your electric vehicles, we've currently got an oversupply now because China has really kind of flooded the market with electric vehicles, and there isn't that much, I would say, of a demand right now because of that. So yeah, it wouldn't make sense, I think, right now to be rolling out further mines until we do see an increase in the demand once again for EVs. The markets kind of digest the vehicles that have already been supplied. I do think that over the long term, it definitely will come because we do need to decarbonize in the long term. But for now, yes, on the back of these lower PGM prices, it wouldn't make sense right now until we see a real turn in the commodity cycle.
All right. Well, industrial company CAP came out with year-end results today. I know that some people don't look at it, hoping that this is one that at least is a little bit on your radar, Faheema. Posting a downbeat performance there, even though it did say that 5 out of 6 of its divisions posted a better performance. Talk to me about this pressure on earnings that we saw there.
Yeah, so I think it's also been a tough environment, and it seems the main issue for CAP has been the performance of Safripol, because Safripol's basically just been impacted by a cyclical low in that polymers industry that we're seeing globally. So again, this is another commodity taker. And they're just kind of at the mercy of these commodity prices. So it's just a tough environment there. And due to that, we did see a decline in their revenue of 2%. Headline earnings per share declined by about 4%. On a more positive note, though, I see that they have completed that new PG Bison fiberboard line, and that's been done ahead of schedule. So they're hoping that can contribute towards their growth in the medium term. But yeah, I think we will need to wait for some recovery in that in the pricing of the polymer commodity before we see some real improvement here.
All right. Faheema, before we get to your stock pick, let's reflect on some of the counters that have found favor with some of your industry peers.
I'm going for Pinduoduo. Pinduoduo is a Chinese e-commerce company. It's listed in the United States, American ADR structure. It's quite an extraordinary business. All-Weather Capital have a global emerging markets team, and they've been covering this business since 2018, when the company IPO'd in the United States. And amazingly, this business in 8 years has grown to be the second largest e-commerce player in China. It's bigger than JD.com. They've built up an enormous business, and they recently announced results, and the share price has got absolutely smoked. The share was $150 a week ago. It's now trading at 90.
AYC, that's on the Aqua Exchange in the US, and it's a Radiant Fundamental China ETF, basically mainland China shares through a quantitative strategy. It's a bit better returns than just buying them completely passively. Shane just made the case earlier, rather than buying Nvidia, buying those shares in China, just like Pinduoduo. And what about geopolitical risk, Rodriguez? What about Taiwan? Well, you better sell your Apple and Nvidias if you're concerned about geopolitical risk, because that's where everything is manufactured.
I'll be choosing Nvidia as much as there was after hours edgy trading. Do strongly see that the AI revolution is here. It's here to stay. They recently had a stock split, so it's a bit more accessible for the consumer to actually buy shares. The share buyback, the $50 billion share buyback that just got recently approved, we're probably going to be seeing an increase in earnings per share. So it's a stock that I'll definitely be looking to buy and hold for the long term.
All right, Faheema, let's zoom in on Nvidia, because that is the talk of the town, of the whole world, actually. And it seemed that Sean Dendera from Tribe Investments found that dip yesterday to be a buying opportunity. Would you be so keen, though, considering how far it has run, even though it did have a slight dip yesterday?
Yeah, Nvidia, that's I think that's the question of all time is, can you still buy the stock? Yeah, there was a bit of a dip, but if you look at it overall, it's still up so much, so significantly over the past year. And if we look at those recent results that were released on Wednesday, that the whole market has been waiting for, it did come in better than what the market was expecting. But I think one of the main concerns the market has was on those gross profit margins. And the fact that declined a bit is a bit of a concern. And I think that's basically what's driving that dip in the price. For now, I think over the long term, it is one that I would say would carry on probably running. It's the leader in the AI space. But from a short-term point of view, I think there will probably be potential to buy this one on a pullback. Generally we see September, there's a bit of a dip in the markets in general. So I would generally, my sentiment is to wait on this one for a more attractive opportunity to buy. I just think it's just looking very fully priced right now, but I do agree that in the long term, we'll definitely see value in that one.
Faheema, quickly before I go to your stock pick, because the Pick n Pay did sneak in an announcement yesterday after market close, talking about basically giving us more information ahead of the Boxer IPO that they're eyeing for before year end, saying that they are hoping to raise proceeds of about 8 billion rand from that IPO. Of course, the issue price will only get that right before the IPO. But I mean, are you sold on this IPO?
Yeah, definitely. I think the market's very excited about this Boxer IPO. We've seen investors over the years try to convince Pick n Pay to, unbundle Boxer, because it's really seen as the jewel in the crown there, I would say. And in the recent trading update that they put out earlier this week, regarding the overall performance, we can see Boxer is still doing really well. If we look at the core Pick n Pay grocery business, that's still struggling. So yes, I think I'm very excited about the IPO, and I'm sure the rest of the market is, and I think it will probably do quite well.
All right. What else are you excited about, your stock pick for today?
So my stock pick for today is Taiwan Semiconductor Manufacturer, and that produces almost 90% of advanced chips globally. Some of its biggest customers include the likes of Nvidia, AMD, and Apple. So if we look at the recent Q2 results, that was very strong. It beat consensus estimates on both the top line and the bottom line. And looking at the margins, that also showed a good improvement. They also released July's revenue, which showed an increase of about 45%. And we're expected to see that improve in the next few quarters. And the main segments which we think will drive growth in the next quarters is your computing and your high-end smartphones, which will enable TSMC to maintain that leadership in the foundry segment and also good bargaining power. So the reason I'm looking at it right now is just because of the recent pullback in the stock price. Before that, it was quite fully priced, but I think after the general tech sell-off, it's now given us an opportunity to buy quite an attractive stock at a decent valuation. So it is on a forward PE of about 22 times now. And I think there's quite a bit of upside from these levels.
All right. Well, thank you so much for your time and for your analysis today on what is currently moving investors' money. Faheema, that was your midday market update with Momentum Securities as Faheema Adia.